While Accounting 101 remains a hard-to-obtain target at most municipalities across South Africa, funds for a variety of projects is at a shortage too. Enter social impact bonds, currently in use in Tshwane through a company called Mergence Investment Managers.
It's providing financing to Project Isizwe to speed up the rollout of a free Wi-Fi project supported by the Tshwane municipality. Kasief Isaacs is a portfolio manager at Mergence and joins us now in studio. Kasief, thanks very much for coming in. Kasief, I don't know if this is truly a social impact bond, but how does this model work? Because you say this is something that municipalities across the country could use to fund sort of infrastructure projects that maybe they can't finance on their own.
So the basic construct of an infrastructure or social impact bond is it's based on an outcomes-based payment model. So municipalities pay off the back of the success of the project.
Okay.
So it de-risks the project to a large extent from a municipality's perspective, because if the outcomes are not achieved, either the amount of payments are reduced, or in worst case scenarios, there's no payment at all. So private sector takes the risk of execution. It allows more room for innovation because the private sector is responsible for delivering the outcomes, and they have flexibility in terms of which model to use to achieve those outcomes. Those outcomes must be measurable. That's critical to the construct of the bond. And in most cases, there will be independent verification of those outcomes as well.
Okay. For that risk that's taken on by the private investor, then let's talk returns. So on the spectrum of returns, what are you looking at the end of the day?
I can't disclose the specific sort of return or the pricing of the specific deal, just due to the confidentiality constraints. But it is, so we use a risk-adjusted model to reflect the pricing of deals generally. And we look at the creditworthiness of the off-taker, which in this case is a municipality and a strong municipality, and therefore is limited credit risk. We look at, in this instance, because it's linked to outcomes, the execution ability of the private sector partner is critical. So have they got a track record of executing these types of projects in the past? And in Isizwe's case, they've already done phases 1 and 2 self-funded and had a track record of being able to roll out at a rapid rate the infrastructure model.
So why is it? So tell us about the project. It's Wi-Fi access, and it looks as if Tshwane is trying to extend Wi-Fi access to as much as 2 million people.
Absolutely.
How is it working, and why is this project so attractive to you guys?
So I think, firstly, hats off to the Mayor of Tshwane for, I think, understanding the criticality or the importance of connectivity in the modern world. People the underprivileged and underserved are already marginalized in so many different ways. So connectivity and access to new revenue streams, new business models, aiding people to do basic job searches, to upload their CVs, instead of queuing up at an internet cafe, sometimes for hours to be able to do so, or not having access to the internet at all. So the whole drive behind Tshwane's project is, they've brought into the United Nations concept that connectivity or broadband access is now a basic human right and not a privilege anymore. And that's the fundamental sort of driver behind the program from the municipality's perspective. There's already a number of fringe benefits that the municipality are seeing in being able to engage with a much broader audience across the municipality. So there's a Wi-Fi TV model that's being rolled out. The mayor's broadcasting speeches, I believe his early speeches had 400,000 visitors, which I think is unheard of in
yeah,
in a municipal context.
We like that kind of those kind of numbers.
And there's sort of online interactive engagement with the municipality, and there's a lot of potential in increasing engagement between civil society, the broader constituency and governance.
Beyond that engagement, though, I mean, the figure or the spotlight gets shone on just how much economic empowerment this actually brings. I mean, we came across the figures. Every 10% increase in broadband penetration increases the country's GDP per capita by 1.28%, and that's quite substantial and something that's certainly hard to ignore, I guess.
Absolutely. And we've seen the success in other African markets. For example, Kenya, which is seen as an ICT or information communication technology hub and innovator, was largely because they rolled out easy and cheap access to Wi-Fi and connected their citizens and allowed them to start participating in the global sort of connected economy. So that research is proven. It's been done by the World Bank and other credible organizations that's done sort of ground level research to come up with those numbers.
Kasief, how does this project, say, fit in with what Telkom is planning as far as its broadband rollout is concerned? Does it have the blessing? Are you in actual competition with a couple of other service providers out there? Which is also quite interesting if Tshwane has chosen to use a company called Tshwane and yourselves to fund it.
So the business model is different in a couple of respects. I think the key one is Tshwane is offering free Wi-Fi to its citizens up to a certain amount. So there's a basic amount, which is actually over the course, it's 250 megabytes per day, which over the course of a month is 7.5 gigabytes of free data. Once people are fully engaged in sort of online sort of transacting online, YouTube and sort of other online type activities that are more data rich, they'll typically need a telecom or another provider to offer additional capacity. So this model says, this is a basic, it's a bit like our utility models, where we're saying there's a basic amount of water, electricity that's free, and if you use more, you then revert to a user pay model, which is where sort of Telkom and others and 3G service providers would be able to then offer the services.
So you've outlined there the risk, the reward, some of the rationale for going down this road specifically with regards to this project. Social impact bonds in general, I mean, is that gaining traction in South Africa? Just to what extent do you see this setting the pattern for uptake in the country?
So, I mean, we can see a lot of value in the medium to long term for social impact bonds in South Africa. So a couple of the attributes that makes it very appealing to government and also donor organizations is it's always linked to a verifiable, measurable outcome. And funds will only flow if those outcomes are achieved. So, that type of model has been applied successfully, for example, in the UK with prisoner reoffender rates. It's something that's relatively easy to measure, and the private sector designed interventions to reduce prisoner reoffender rates. You can measure and track the success of those interventions. If you achieve a basic level of success, there's a guaranteed payment, and the more successful you are, the higher the upside is to the private sector as well. So if you apply that model to, there's a number of different, in South Africa, obviously prison and crime is a big issue. You've got sort of HIV type programs, basic education programs, other infrastructure projects, municipal infrastructure, which is another major bottleneck. All can benefit from this model. So it can be transformative, but we are in the early days in the South African context of really leveraging this model.
Well, I hope there's quite a lot of uptake. Kasief, we have to leave it there. Thanks very much for joining us in the studio this evening.
Thank you so much.
Of course, Kasief Isaacs is with Mergence Investment Managers.